TPO stands for time price opportunity. The definition of a TPO, though, is a bit misleading. What it stands for is not necessarily what it is. My definition on a TPO is that TPOs are variables that describe price ranges throughout periods of time. Most market profiles operate with a 30-minute time period. Each 30-minute period is labeled a variable, or a TPO. It can be a set of numbers, it can be shapes, it could even be letters. Letters are the most popular way of viewing a market profile. For example, if I'm using a time period of 9 a.m. to 9:30, which is a 30-minute period, I'm going to assign that time period a letter, or a TPO. So from 9 a.m. to 9:30, we're going to say that's going to be letter A. From 9:30 a.m. to 10 a.m., we're going to say it's letter B. From 10 a.m. to 10:30 a.m., we're going to say letter C. From 10:30 a.m. to 11 a.m., we're going to say letter D. In this example, I added a variable, or a TPO, to a specific range of time, a 30-minute range of time. Understanding TPOs is crucial to understanding a market profile and how it plots over time. Here's an example of what we mean. So letter A is the first 30-minute period of the day. We can see it here on the image of this profile. Letter B is the second 30-minute period. Letter C is the third 30-minute period. Letter D, fourth 30-minute period. And letter E, fifth 30-minute period. Also notice the valley area highlighted in green, which is about where 60 to 70% of all the day's trading took place. Now, if you've never traded with a profile before, it may be difficult to understand how we get this pile of letters stacked on top of each other. Let's take a look at it in a different light, in a way that we all understand, which is candlesticks. If we take a look at a 30-minute bar, or a 30-minute TPO, is another way of looking at it. We can see the first 30 minutes of the day, letter A, and the high and the low of that bar. We can see the second 30-minute of the day, 30-minute period of the day, the high and the low of that bar. The third 30-minute of the day, the high and the low of that bar, so on and so forth. It's only when we combine it and we bring these all together that we get a distribution shape that looks like this. I hope this is making a lot more sense now than it was before.